Good evening, everyone. Welcome to Canada IQI Canada Facebook Live Evening Talk. As you know, April. Those who are living in Canada, April is the month of tax season, as we call it tax season, because April is the month when all the income tax filings are due to be filed. To talk about the tax, today we have a special guest, Mohammad Azam Razzak. He's a managing partner of Masters accounting consulting firm based in Toronto. Welcome, Azam. How are you doing?
Thank you very much for having me here.
Azam Razzak is a CPA, and has got a long list of degrees with experience in different countries over the last couple of decades. Azam would be helpful to tell us about something about yourself and about your firm.
Thank you very much. My name is Mohammad Azam Razzak. I'm managing partner of Masters Consulting. It's a professional corporation under the CPA Canada, Ontario. We are sorry,
You
I'm
can
just
hear me?
giving a pause. No, I'm just giving the
Yeah.
pause because there's a sound of the prayers.
No worries.
Yeah, and coming back to my experience, I hold more than 25 years of experience. I'm CPA USA, CPA Canada, FCCA UK. Uh, I'm registered mentor with the Oxford Brookes University UK. I'm a registered financial literacy expert with the CPA Canada. Uh, Provide mentoring to the IV executives for their career growth and career planning. And simultaneously, I run my own firm, as we have mentioned, Masters Consulting, to help the Canadians and the non-Canadian also for their any consulting requirement with regards to taxes, cash flow management, bookkeeping, reporting, feasibility studies, planning, and everything. So this is
Thank
a
you.
very short, brief intro.
Yeah, thank you. I mean, amazing. I think the type of things you do over the time. So today we are going to talk about specific about the tax treatment around giving with the COVID. A lot of people are working from home, right, for last 12 months, and Canadian government has provided a lot of benefits due to the COVID. So just for the interest of audience, as we always say that this is not a specific tax advice or the legal advice. This is a program, and the discussion we're going to have is the benefit of general public to share knowledge. If you are anyone looking for any specific tax or legal advice, they should get in touch with their own specific legal advisors. If anybody want to get in touch with Azam Razzak, please contact us at IQI. We can refer to him, and there is the details or how to get in touch with Mr. Azam Razzak in the comment section. So, Azam, coming back to we were discussing before that Canadian government has been so kind and so generous in providing a lot of different type of benefits of different type of people, from individual salary employees to self-employed to small businesses. Before we go and talk about those specific programs, given we are in the tax season and the returns to be filed during the month of April, I know a lot of people use a consultant like yourself to file their return, but I think for the general public, it would be good if you can tell us what is the benefit available for people working from home. If you start with the salaried employee.
Yeah, thank you very much. It's a very right and relevant question because nowadays it's a hot topic also. Because working from home has become a new norms in Canada or throughout the world. However, CRA, because see, for employees or for employment, like when you file the taxes as a taxpayer, in a normal scenario, employees will not have a flexibility to deduct any home related expenses or any personal expenses towards their income generated from the employment. They are
You're talking about
complete
salaried employed, right? For now, we're talking about salaried employed.
yeah, salaried them, right, and
Because
they
salaried guy normally was supposed to be working from office. So since last March, April, they're working from home, and they're
yeah.
using lot of facilities at home. So nobody's using going to office. Not majority of people are not going to office.
Yeah, very right, very right, and that is why CRA come up because with the mechanism to allow salaried employee to deduct from their income, from their taxable income, work from home benefit. This benefit or this allowance or this admissible expense, whatever you call it, has a two type of, they have given two options. One option is very simple, which we call it simplified method or simplified way of, charging off. It's a maximum cap at 400 Canadian dollar. This is calculated based on number of working days which one person supposed to do or work from home. It's 200 days with the rate of $2 Canadian per day. So total cap is $400. It's a very simple. You don't need to provide any supporting documents. Just try to be, honest with regards to your number of days. Technically, from March, if we calculate up to 31st December 2020, the number of working days comes out to be approximately near to 200. Yeah, if you calculate based on 22 to 23 working days in a month, you multiply by 8 or 10, so it will be like 200 plus. So if, just for giving you example, if you want to, you calculate and you come up with the number of that, okay, I have, work from home almost 160 days. So you would be allowed to, under the simplified method, deduct 360 directly from your taxable income. It's not much, but it's still coming up something, small things make a difference. And if husband and wife, and if you and your spouse both are working, both can claim in their taxes. So technically for a one household, it's $800 straight without any documentation, based on the declaration and based on the number of days.
So I have a question here. So what you're saying that if I am a salaried employee and I started working from home last year, for example, not from March, maybe from June, right? So in 7 months, so typically you have 23 working days. If I take 20 working days, I work for 150 days because a working day is not a weekend, right? So working days, 150 working days, and $2 per month is I can claim $300 for that tax year against my income.
Yeah, and it's a direct deduction from your taxable income. So
Which,
that is like, it looks small, but it's a big benefit. Yeah.
which was zero before COVID, because you're even when working from home, you can't claim anything because there was no option whatsoever
Yeah,
for salaried
it never
employee.
it never existed. Yeah.
Because I know there are certain people who used to work from home, even they were salaried, because some of the people who were working for US companies, they never had offices in Canada, so they were working from home. So they were never had an option until the COVID, when government allowed that option to be claimed.
Right.
Okay, so
Right.
there's a simplified option. So anyone who is working from home, a salaried employee, is good news for you guys that you can claim $2 per working day up to the maximum of $400. That's a
Right.
simplified option. What is the other
Right.
option?
Other option is there is a detailed form. The form number is T2200 22,000. That has to be it certified by the employer.
Hmm.
So employer can include, if if employer agrees and willing to consent and certify that, because definitely this form to be submitted to the CRA with the filing of your tax return, and CRA has all the right to come back to the employer and to audit that if they want. So employer has to include all the relevant benefit which they can offer you as an employee, which employee benefit means this is not like they are giving a benefit which is taxable to you. It is like, we expect that this employee was supposed to work from home, and to work from home this employee could include 1, 2, 3, 4, 5, 6. There are list of things which anyone can include. One of the biggest example we can say rentals, because it's a big expense for the house, or a property taxes which you pay on your house. If you're using your house for your employment and that is acknowledged by your employer, an employer give you a certification by way of signing off to this form which we have referred T2200, then it will go to the CRA, subject to CRA review and approval. Once you get this one, you will get the benefit. Normally, definitely based on the allocation, the benefit will not be like in thousands of dollars. It may be a little bit higher than the simplified method, but definitely it requires a lot of efforts to go to the employer, get it signed, filed, and all these things.
So I'm sure there must be a formula where if you're living in a 1,500 square foot home, and there must be some formula or some calculation, the basis for based on which you can claim certain element of that house as a workable office space.
See, yeah, yes, but another again. Simplified method is fine, but under the certified method, where the form to be certified by the employer need to agree.
Hmm.
Employer, see, we need to understand this analogy that when you are doing, when you are going to the office, you commute to the office, you work there, and you commute back. While working from the office, you are saving some. That is why it's $400 only looks like, but you are saving your cost to go to your office.
Hmm.
You are saving your time for the commute to the office. You are saving your fuel cost, which is not allowed, like your gas.
Hmm.
You are saving your repair and maintenance wear and tear for your commute or car or your whatever the transit you use. Yeah.
Okay.
So for coming back to the point that what or how much we can charge off under the certified method, it has to be logical, maybe 10 to 15%. But again, as Junaid has mentioned, that this is not a opinion. This is like based on the experience. We are sharing our opinion. If someone needs a specific opinion, they need to get back to us, touch base to us, or they need to contact their lawyer or their tax advisor and go by their advice.
Yeah,
This is
perfect. I think
this. Yeah, yeah,
it's very, very relevant because simplified version is simple, but for the other option, there are a lot of calculation involved, a lot of basis. Everybody's circumstance is different, so it has to be done a actual calculation base, and it has to be agreed by the employer, and of course to be reviewed and audited by CRA. So it's also important before you do anything. Please make sure that you take a right, appropriate advice.
yeah.
Now, this is for salaried employees. Now, I understand that the for the as we as IQ as a real estate business, we are a lot of realtors who are mostly self-employed, and I think even before COVID, self-employed uh, and the small businesses have already have certain provisions which allows them to claim certain expenses if they are using their home as an office also. I guess there's no change pre or post COVID, but if yes
No,
or no, and if it's no or yes, what are the changes? What are the rules applicable for the self-employed if they were to claim any expenses
yeah,
working from home?
very relevant for the realtor also, because realtor, yeah, they are a self-employed. It's just like a subcontractor. So
Hmm.
they do not have a opportunity or to get that certified from anywhere. So so yes, there is no specific change from the previous year, but acceptability to charge off your home office expenses against your self-employment income is really, it's relatively more. So CRA is going to accept more deductions as they expected up to last year, when or pre-COVID, pre-COVID scenario. In the COVID scenario, they know that okay, the sole proprietors now they are almost 80% or 70% plus working from the home, and and I know personally also, and everyone, I think all the realtor knows that people have pushed themselves to create the space in the house in the way to accommodate or build up your office space. Everyone cannot have a separate isolated office to deal with the clients, to speak, to have a conference calls, it's a virtual world and all these things. It require a very isolated space. Everyone do not have that a luxury. So when this pandemic hit, and relevant to the realtor also, almost everyone had to see the space in the house and start using that. When they need to do that, they had incur some additional expenses. Means one of things are like capital asset, like
Hmm.
maybe some computers, some two screen. Like I use two screens or two screens, some equipment, some table, some office chair. In a normal world, you don't use home. You do a half an hour job maybe at home for your office related work. But when it reverse, when you're working almost 8 to 12 hours for office in the house as a sole proprietor, things change. So they like internet connections. People used to have internet connection which they want up to the limit. Now they have a unlimited. So there's expenses going up. Similarly, goes to the you know the furnace requirement, gas requirement, hydro requirement, and all these things. So when you club these together, CRA expect and CRA knows that this year the sole proprietor or self-employed people under non-corporated like an unincorporated like a realtor will be charging off more expenses against their income as compared to previous years. However, we need to be vigilant. We need to be realistic. We cannot tell the CRA that I'm living in a house of like 2,000 square foot house and I'm using 1,000 square feet for my self-employment. So it has to be logical. You might be using a home space between 150 square feet to maybe 250 square feet. So potentially 15 to 25% based on the house space, and based on that you can charge off whatever relevant expenses to earn your self-employment income.
True. So effectively, is a I think the average office space, even if you go and rent an office space, an average office space is between 100 to 200 square foot maximum for one person,
Yeah,
and
right.
if you're living in a 1,000 square foot house, it's become 15 to 20%. If you're living in a 2,000 square foot house, it becomes a 10%, depending on the proportionate to what 200 square feet versus your total house space. And effectively, whatever property taxes or other taxes you pay, you can take up that percentage of that expense. Again, this is a very general basic rule. This is not specific legal advice or tax advice. So please make sure that when you do such calculation and submit your return, you take a specific tax consultant advice to make sure that you do the right thing first time. Because if you do something not in line with what the CRA think is appropriate, you will have to have an audit and the questions being asked. So it's better to be safe than sorry afterwards.
See, the idea is always it should make sense. If if
Yes.
if if you are a realtor, you are using a home space, and you say that I'm using my 15% of my space, and you include your property tax, if you are on the rental rent, if you are on the mortgage, maybe interest expense, your internet percentage, you may allocate higher as long as you can justify. You can say it's not 50%, it's not based on the square feet, but it's based on the utility, and I need to upgrade due to the scenario. Same
Yes.
goes back to your telephone expenses. Telephone expenses will not be based on this. Telephone expenses you may go up to 50%, 50% 50% business, or based on your whatever, how that scenario fits you. So you need to be like list down all the expenses which come into play when you provide your services from the home, and then see how much and what are the drivers. Driver means like for a house, for a rental, or for the property taxes, for the mortgage interest, maybe the square footage is the right driver, right measure to allocate the expenses to the business, to the business, and to for personal things. Same applies. And one thing I would like to add, very important, when you charge off these expenses, don't forget to take care of your HST or GST paid on that. So if you are incurring the expenses as a self-employed, which is realtor, very important for the realtor, because realtor income is almost 100% income is subject to GST or HST. So they get charged, heavily. They collect the money, and they, at the end of the year, good realtor or reasonable realtor are sitting on a like thousand of dollars to pay to the Canada, Canadian, to the CRA and the Canadian government. So whatever the expenses you allocate, try to allocate properly with the supporting, so you should be able to claim your related GST or HST portion on that and reduce your payment to the CRA.
So, Azam, I want to just say hello to our audience. Yusuf has joined us. Hi, Yusuf. Thank you for joining us. Erami is the one also joined us. And Kashif Ansari, who's in Malaysia, our group CEO, also joined us. Thank you, Kashif.
Welcome all.
Coming to the work from home. So it's good to know all those details, right? So I think the one important factor is like I myself upgraded my internet. I used to have like 250 Gbps, went to 1 Gbps because not only because of me, but also with the kids and family who are also studying from home, right, online. So the bandwidth, which was enough before because nobody was at home, either kids were in school or I was in the office. Now everybody, especially with the video calls, like right now we are doing this live program from a home. the video content take a lot of bandwidth.
Of
So
course.
that upgrade has 3 to 4 times what the speed we used to have. So what you're saying that we can, instead of relying on your per square footage, because the internet has nothing to do with per square footage. Internet is depending on what your usage is. A lot of
Right.
Zoom calls happening, a lot of video calls happening, which has never been the case before. Your requirement has gone up multiple folds. So that can be driven from the usage instead of. So effectively, I can prove that pre-COVID or me working from home, I had this speed of 1. Now I have speed of 4. It's become 4 times of what it used to be. So I can claim at least 50% of that to my and 50% to my kids going to school, I guess.
Yeah, 50% is very reasonable because definitely kids and other members of the family are using that internet, but their usage is limited to number of hours, maybe
Hmm.
4 to 5 hours. But being as a realtor working from the home, you might be using that services, client facing, client meetings, and everything is like need the video nowadays because without the video it's very difficult to authenticate, identify, and like FATCA rule and all the FinTrack rule, you need to comply with that identification and all the other stuff also. So for that you might be using that for maybe 10 hours or 12 hours a day. So you have a more flexibility or more allowability to charge a higher expense, higher allocation of the expense, as long as it makes sense. There's a story, it can be justified, you are good.
Okay. Um, so I think, and of course, important to keep the documentation, right? Because the actual receipts of the expenses you incur, right?
Yeah, this is very important rule. I think maybe all of us, including me also, sometimes we are ignorant on that part that okay, it says $20, doesn't
Hmm.
matter. But basic rule is honest to proof is on the taxpayer. So if CRA come back as per the rule, if you do not have a receipt, that particular expense, be it a $1, be it a $10,000, will be disallowed. So
Wow.
they want to they wa- because as per the rule, as per the income tax regulation, the taxpayer should be able to prove an expense by support of receipts or whatever the third party receipts. It's not that you are sharing your bank statement. See, I have a debit in my bank statement. That is not the right evidence for the CRA. They want to see a third party because again, you are living in a tax based country or a framework. So if why CRA want to go to a third party, because that particular expense, let's say $1,000 expense has a GST of 13%. So they are checking you from an expense perspective, but they may be going to the third party to verify whether that person has submitted their GST collection right to the CRA. So it's like a cycle. So
So now with the COVID issues, Azam is a very relevant point you raised that the CRA need a documentary evidence and invoice, not even a credit card receipt or debit card charge, because when you go and buy something from a vendor, you get a receipt with the itemized receipt and then a credit card slip. So
yeah,
credit card slip is something for your own purposes, but the CRA need a proper itemized receipt.
yeah.
At times, in some of the vendors, even if you take a receipt, you lose the receipt. So if you lose the receipt and you still claim it, and if CRA calls for an audit, they will disallow that.
They will disallow it. There are a lot of instances we know that they normally don't. There is no flexibility on that because
So,
when if you are not able to prove that, it means you don't have that expense.
so for how long? So how? What's the best? I think I guess the best way to retain
Six,
is to scan it and keep it, because
yeah.
sometimes.
See, nowadays everyone. See, there are a lot of I would say apps there, but that is like a subscription based $5 to $7 a month. You don't need that if you don't want to. Uh, if you're using a smartphone, I can give you example of like I'm a fan of like Apple products. So Apple any phone has a notes. Go to the notes. You have you just click to the there's a icon for camera. You click that one. That will give you a scan option, and you can scan like scanner. Scan that, send to your email, and then maybe a week after a month after daily whatever is your practice, you can copy paste this to any of your drive, and that's it. It's a little discipline, but it will save you a big hassle, because ultimately it's a deduction we are talking about. If
So
you
when
want to
you file
really
the return in April for the month of April, how long I have to retain those receipts?
6 years from the relevant period. So if we say relevant period is fiscal period is Jan 2021, 2020 to December 2020. So it's 6 years you have to keep, by law, you have to keep that record. After 6 years, nobody, even CRA want to check it. You have a legal or legal justification that we are not supposed to keep a record beyond 6 years. So you can
Okay.
check it otherwise.
Okay. So in terms of the deadline, is April the deadline, or the government has given any option for that?
See, today is 15th of April. Unlike USA, we Canadian are always, take action very at the very last moment, or try to, keep it a little bit, have a little bit of, curiosity. So far, it's 30th of April, but we believe because of this, stay at home order in Ontario and everything going on, it we expect this will be extended. It has to be extended because still, if we go by the population or see those who are supposed to file a taxes, we still have a more than I would say 40 to 50% population. Those are not tax savvy. They don't know how to scan. They don't know how to email, how to send the document. They want to meet you. And under the current COVID-19 situation and under the current stay-at-home order, even though we have all the, like, whoever has a office, all the possible measures taken, but still people want to meet you and discuss your case because it's a tax. Everyone is not a tax planner. Some people have a different scenario. Someone has a daughter issue. Someone has a disease spouse issue. They want to discuss. There's a someone has their inheritance coming into that. So it's like, yeah, T4, simple T4. It's very simple tax return, but we believe it will be extended. There is no point, no way that Canada is going to meet 30th April tax deadline fully based on the current scenario.
Yeah, I think is something with the current, because every day we are seeing cases are going up, and the government is trying its best to make sure that to curtail those spread. But I'm sure the government will do its best, and in these circumstances, whatever is needs to be done needs to be done. But I think the sooner the better. Whoever can file sooner, they should file, and it's very good. I think there are a lot of benefits also linked to you filing a return, because there are a lot of government benefits, unemployed benefit, and child benefit. There are a lot of other benefits people get it based on your file return. If you don't file the return, that returns will might have some challenges.
Yeah, right. So if you don't file the return, your child benefit, your GST or Ontarian OTB, Ontarian benefit will stop effectively July 2021, because CRS system will not have a knowledge about your 2020 fiscal year numbers or household income, so they will not be able to decide that what are your entitlements. So
Hmm.
when they are not able to decide your entitlements, they normally send you the letter or taxpayer letter in July, and they say, because we are not able to complete our assessment to come up with the household income for a particular dwelling house or particular housing, so we are unable to offer you these expenses until you submit the right information or file your taxes. So filing a taxes is like not an option. It's like a civil obligation, it's not a criminal, but it's a civil obligation. Everyone has to do that. But if you don't do that, there is no action against you. If you want to access the benefit which government offer, you have to file the taxes.
And what if your liability to pay government some additional tax, and if you don't, is there a payment due date also? There's a tax filing date
Yeah,
and there's a payment.
yeah. As of now, for a self-employed and for a salaried employee individuals and the population, the deadline is 30th of April. If you have a tax due, not a refund, and there's a liability towards CRA, Canadian government, you need to pay amount by 30th of April, as of now, as
Oh,
we
so
speak.
filing and payment due date is the same. It's not different.
Yeah, as of
Okay.
now, it's, yeah, because last time when COVID-19 hit in 2020,
March.
the filing date and the payment date was different.
Hmm.
So the CRA come up with the mechanism, okay, you can file up to 1st of or 31st of August, and then you can pay your taxes by 30th of September. But now, no, it's as of now we are in a normal scenario where 30th of April is a tax filing date and payment date is also 30th of April.
So we are talking about the income tax. Just to clarify the audience, we're talking about the income tax. I think HST returns are still due as a normal for the first quarter. You have to pay by the 30th April. The same. There's no change in that.
There's no change. It again, the GST and HST return does not apply to the salaried people. It's only applied to the self-employed and like a realtor.
Businesses.
Those businesses are self-employed and like a realtor, and it goes back how you got registered with the CRA. If you are registered as a annual filer, then annual filer, and then 31st December should be your annual end date, and you should be filing your HST GST return as of 31st of March after within the 90 days, and with the payment also. If you are a quarterly, then definitely 4 quarter. If you're a monthly, then every month. So it goes back how you got registered, and then later on after registration, how your income level or GST level, which you supposed to pay to the CRA on a regular basis, come out. If it's normally it's annual when it's 3,000 to 3,000 only. When you are more than $3,000, CRA change the rule. CRA say no, it's quarterly. When you go further ahead, they say no, because it's their money. You are acting as a agent of the CRA to collect the GST and HST from your customer. So that money is not your money. It does
Yes.
not belongs to you. So don't spend it.
Yeah, I think
Because
I would rather make a practice of doing it on a quarterly basis by choice, because whatever is HST GST collected minus my whatever I paid claimable, I would rather pay it on a quarterly basis rather than, because if I spend it and by the year and I don't have money to pay, so
yeah,
it's
see, we are human. We have a natural tendency to spend it. When you spend it, and I have done a lot of cases. I've called CRA. Ultimately, we got the installment with the interest, because CRA will charge you the interest. But they were really hard on that. Why your client or why your client has spent this one? That money was not their money. Anyway, then you give them the reason and everything. They don't like it, but ultimately they are getting the money back.
I think that Rachel also has joined, and Sarah. Greetings and thank you for joining us. If anybody has any specific questions, you can ask on the chat, or you can later get in touch with the IQI team. As you know, the IQI has been working with different partners. Azam is one of them, who has been kind to agree to us, spend time and share the knowledge. Azam, other than I mean, today we've spent a good bit of time discussing the tax implication of working from home benefit, working from home. As you know, I would before we end the program, I think there are a lot of other benefits which government of Canada has generously provided to not only salaried but self-employed but small businesses. If you just give us a list of that, we're going to talk about those in a future programs we have with you as a regular program. But
Yeah.
just give us a list, and then we can discuss on our other programs more details about those.
Yeah, for individual, for for employed and self-employed, those who are had a hardship. See, this is all linked to your hardship of earning an income. If you're not able to earn the income and your income level has reduced to 50%, and if you got sick unfortunately and you have to quarantine, or if you have someone to take care, your child who got sick and you need to take care, this comes everything is a one bucket with the different names. So CRA has offered CERB, which is Canadian Emergency Benefit Response Benefit. That was almost $2,000 for every month. Yeah, and then we have a CRB, which is still currently CRA is offering. But again, all these benefits which we are referring, you should not be eligible for EI. If you are not eligible for employment insurance, then you can apply this one. It's very quick, very simple. CRB, you get $500 every week, 10% deducted at source. At source means CRA deduct 10%, $50 tax from your CRB benefit of $500 every week. So potentially for 2 weeks, you are getting a $900 for 50 for 2 weeks. Then there is a similar calculation for $500, 10% reduction, 450 you will get every fee with the different name, which is Canada Recovery Sick Benefit. Unfortunately, if you got sick, Canada Recovery Care Giver Benefit if you want to take care of someone in your household. This is for the individuals. For the businesses, businesses basically there are two types of benefits or support offered by the federal government and the provincial government. Let's talk about the federal government. Federal government has offered SIBA loan, which is an interest-free loan for next 2 years potentially, and then out of that, almost 33.33% is off. So if you get 60,000, 20% is waivable. It's not, you are not supposed to pay back if you pay by certain date, and we expect that going forward, this within that there would be more flexibility coming in. Then there is a to keep the employment and your workforce in place. They offer the Canadian emergency wage subsidy, which is a big item. I know the people, those who are holding off, holding their employees and their payroll is $8,000. They are getting $6,000 back from the government every month. Definitely, there are certain eligibility criteria, which is aligned with these revenue numbers. Then you have a rent subsidy, which is very important also, because for the businesses, the main expenses is your commercial rent, which include TMI and everything. Initially, federal government has offered through the landlord, and then later in the fourth quarter, they have changed to directly. You apply directly, you get applied. Definitely, you should meet the criteria. Then they have offered the other loan benefit, HASPAC. There's a RFF, based on your hardship and which segment and which category of the business you fall in. From a provincial government, which is Ontario, they have offered a big benefit, which is a grant. I think nobody had expected, but that is came out when they have done when Ontario government has done the lockdown in the Q4 2020. They come up with the grant. Initially, that the grant was $10,000 to $20,000 based on the certain criteria, and now in the month of April, the second tranche of grant is coming. So whoever was successful, met the requirement, let's say got $13,000, they will get the $13,000 second tranche in the month of April. And the provincial government also come up with the property taxes, PPE benefit of up to $1,000, and your gas bills. Being a commercial property owner, you would be paying a gas bill, your property tax, your PPE, whatever you have spent, and your this grant. So 4 benefits offered by the Ontario government. So this covers the entire package.
It's amazing that the number of benefits and the government, Canadian government and the Ontario government has been so generous to support the Canadians to make sure they should be able to stay at home whilst working at home, and to be able to pay their expenses, pay their rent, and to pay the salaries of the employees or the businesses. I think it's a win-win for all, and the support is amazing. Thank you, Azam, for telling us so much information and sharing all the knowledge. We appreciate your time, and I think for the next future program, we're going to talk more detail about those benefits, because these benefits will become relevant for some time, because not only applicable for 2020 tax, but also be applicable 2021 tax. Thank you very much again for your time. And anybody who would want to get in touch with us, IQI, you know the numbers, you know the email IDs. You can contact Azam. The details are there in the comment sections. And thank you, Azam. And stay safe and keep physical distance, everyone. And enjoy your evening.
My pleasure. Thank you. Stay safe.